Hey there, wisdom seekers. Welcome to my YouTube channel. It's Coach T, back with another episode. And I'm excited about this episode today because I'm going to be talking about how to ... your life. And I'm sure you're wondering, what is a ... all about? Well, you're going to fill in the blanks. Recently, someone asked me, how can I recession-proof my life? I thought about that for a minute, and of course, that's after trying to decide if we're even in a recession. And I realized it really doesn't matter because I've been getting a lot of questions from the community about, loss of job, disability. So today I'm going to be talking to you about how to protect yourself against an economic downturn in your life because it doesn't really matter what's going on in the economy. Now, bear with me for a minute because I am going to give you the technical definition of a recession because we hear that R word thrown around and a lot of people don't even know what that really means. Well, I'm going to take off my coaching hat for just a minute and I'm going to put on my financial advisor hat. A recession is technically a widespread downturn in our economy that typically will last longer than a couple of weeks. Rule of thumb is a shrinkage in GDP. That means gross domestic product. It's a shrinkage for at least 2 months. And gross domestic product is all of the products, goods and products sold in our country in a period of time, okay? So depending on what news outlet you watch, what your pill of poison is for your news, we may or may not be in a recession. But again, doesn't matter. We're going to be talking about how to protect yourself against uncertain times that are definitely coming. Now, let's get into some of the concerns that you have been sharing with me through direct message. One of the major ones, and I've gotten this question from so many of you, is loss of job. How do I protect myself if I lose my job? Well, certainly one of the easiest things to do, and I'm going to start with this one, is emergency reserves. You've got to be able to go 3 to 6 months without a paycheck. I have been saying this for months, and guess what? I'm going to beat this one into you because you cannot skip that step. Emergency reserves are critical to building wealth. So emergency reserves is a great protector against loss of job. Be able to go 3 to 6 months. The other option is look at a second stream of income. Get yourself a side hustle. The best time to have a second stream of income is when you're already working. So get out there, look around, think about the talents that you have and put them to work. Another concern that people have that will cause turmoil in their household is disability. If I told you right now that there was a machine that I was going to give you, and from the day you step foot in the workforce to the day you retire, that machine is going to generate hundreds of thousands of dollars for you. In some cases, over $1 million. Would you insure it? Well, of course you would. You know what that machine is? It's your ability to get up and earn an income. You've got to be able to insure that. How do you do it? Well, if you're working for someone, disability coverage is key. Most companies will offer not only short-term, but long-term disability. So look into the benefits you have at work. Open enrollment, it usually comes up between September and December. So this is a perfect time for you to drill into your company benefits, take out long-term and short-term disability. Let me ask you this. What do you think the next thing I may be mentioning? It's going to be a common theme. You got to have rainy day fund. You got to have money put back in case of those emergencies. And guess what? The average disability lasts anywhere from 3 to 6 months. Okay? So again, here we are talking about emergency reserve. So can you see how all roads go through emergency reserves? So stop procrastinating and get started. This next one is a big concern for the community, And that's the premature death of a primary income earner in the household. Now, death in a family is always causes anxiety and frustration. It's even worse when there are money issues. This is an easy one to solve. If you are working for someone, you're a W 2 employee, guess what? You can take out life insurance through your employer. Many times they will allow you to take out two, three, four times your salary, as well as take out insurance on your spouse and your children. So you could insure almost your entire household through your employer. So open enrollment is coming up in the next 3 to 4 months. Again, take a look at your benefits that are offered through your company and take out life insurance, not only for you, but for the rest of your family if possible. If you are not a W 2 employer, a W 2 employee, then guess what? You still have options. There are tons of online insurance companies. So get out there and do a search for insurance companies and look at taking out just some basic life insurance on your life, and again, possibly on your spouse and others in your household. That is the best way that you can protect yourself against premature death of an income earner. The other thing that I want to talk to you about is getting a will. A will is critical because what happens when someone dies is that there are so many different issues that you have to take care of. And if you have done a will, if you don't do a will for yourself, you do the will for the people that you are leaving behind. So make it easy on them. Get life insurance and get a will. Now, of course, we cannot talk about recession proofing your life without talking about debt. You've got to start now paying down those high interest credit cards. Why? Because debt is the enemy of financial freedom. It's kind of like trying to swim with weights on your ankles. You can never come up for a breath because you're always underwater. So you can start now. Make a list of all of those high interest credit cards. Come up with your own plan on how you're going to pay those cards off, if possible, in the next 12 to 18 months. Start with the smallest first. That's a strategy. They call it the snowball method. But whatever works for you, I want you to have a plan in place by the end of this month to pay off those high interest credit cards, because there's no way to reach financial freedom carrying around the baggage of debt. Now, if you're unsure of how to do that, check out episode 4, Stop Spending, right here on my YouTube channel, where I give you some tips on how to control that impulse buying. Now, this next question comes from the more mature members of our community, and it's forced retirement. Retirement is a great time, but it's not so much fun if you're being forced out of your company. What is the best way for you to protect yourself against that? 401k. Now I'm going to say it again. If you've got a 401k, contribute. And once you start contributing, don't use your 401k like a savings plan. I hear people talk all the time about how they're going to borrow money from their 401k to buy a car, to buy this, buy a house, to buy all sorts of things. But there's a downside to it. Even though you're paying yourself back, and that sounds really good, there are some cons. One, that time value of money. All the time that you lose that your money could have been working for you, and you can't get that back. Two, many times your company will black you out of the plan. They will not allow you to make contributions if you borrow from it, and many times they will keep you from contributing for up to a year. Again, time value of money. That's all that time lost. And then the other thing that people never think about is, what if you borrow from your 401k, the market's down. When you pay yourself back, the market's up. What does that mean? Well, it's kind of like if you go out and buy a house today, and that house is $175,000. You sell the house for $150,000, and then you turn around and buy it back 6 months later for $225,000. Well, you lose. Well, that's what's happening many times when you're borrowing money from a 401k. So borrowing from yourself in a 401k may sound good in theory, But what it could mean is you working a whole lot longer than you'd planned. So contribute to that 401k and don't use it like a savings account. Many of you have asked me about what can you do if there is a long-term illness or disease of a primary income earner? That's a tough one. But again, it's really an easy solve, especially if you're working for someone. Did you know that most companies offer, certainly you understand that they offer health insurance. So if you're working for someone, please take advantage of health insurance. If you're unsure of the best type of health insurance for your family, then talk to one of the benefits coordinator. They will work through, many times there are worksheets you can work through that will help you decide what that's going to look like for your family. The other thing that most don't realize is a lot of companies also offer long-term care. If you don't know what that is, long-term care, unlike health insurance or life insurance, what it does is it protects you should you or your loved one end up in a long-term care facility, a nursing home facility, or need assistance on a day-to-day basis. That is a great way to protect your family against long-term sickness and disease, as well as there are also critical illness insurances that you can take out on yourself and on your family members. So I mentioned it earlier, open enrollment is coming up. So I want you to take a deep dive into your company benefits and see how you can protect your family with seriously discounted dollars. And that will certainly help you with some of these uncertain times. This final one, large unplanned expenses, can always cause some uncertainty in a household. But how do you think that you can protect yourself against that? Yep, I've talked about it many times. Emergency reserves. Now you're probably thinking, wait a minute, emergency reserves are for when I don't have a job. No, emergency reserves are for emergencies. Losing a job isn't an emergency, right? Somebody dies, that's an emergency. Large unplanned expense, that's an emergency, because think about it. If your fridge breaks down, your washing machine breaks down, something happens to your roof, you don't have money in the bank, what are you going to do? You're going to go back, create debt that hopefully we've just paid off. So what that does is it creates a buffer. It keeps you from going directly to your credit card when something happens that's unexpected, when life starts lifing. You've got someplace to go. So reserves are a great way to protect yourself against those unplanned expenses. Well, you know what time it is. It's wealth work time. You know, I love to give you an assignment every month. And this month, we're going to go back to an old one. We're going to start, yep, you guessed it, emergency reserves. I am going to hammer emergency reserves every single month until I've said, you know what, they got it. And you know how I'll know you got it? It's when I'm getting DMs, I'm getting comments in the comment section that's telling me, T, I got it. I've got my reserves. I'm on my way there. Then we'll stop and we'll move on. But every time you see me pick this up, we're going to be talking about emergency reserves. So the work this month is I want you to determine how much you need. I've been getting comments from people saying they don't even know how much they should have. I want you to figure that out. Come up with a number, because once you've got a number, now you can begin to work towards it. 2, figure out a way to fund something immediately. Couple of ideas. I know all of us have stuff in our closets, probably things you haven't worn for 2, 3, maybe even 4 seasons. Collect all that stuff. Take it to a consignment shop. Take that money and start your reserves immediately. Old furniture. Go to your storage facility. Is there stuff in there that, you know what, you've been hanging on to, saying you're going to give it to someone? It's still there. Take it to a consignment shop. Great way to get money immediately to fund your reserve. Okay. Secondly, I want you to look into getting a side hustle. I was talking to a good friend earlier today, and she said something to me. She said, you know what, if there's a recession and my company fires me, I've got another job. I can go out and make me some money. But she's got a great job now, but she has a side hustle. So she's not as stressed. So figure out something else you can do to bring in another stream of income. Doesn't have to be a lot. It could be making phone calls at night. You figure it out. You know your talents. I don't. And let's start to prepare for these uncertain times that are certainly coming. And guess what? I want to help you do that. We can do this together. So check in with me each week where I'm going to be giving you tips on how to make this happen. I'll see you soon.